Okay, the UAE now is going to introduce a 9% corporate tax rate on business profits. This is not going to start until June the 1st, 2023, so it is a while off. But the statutory tax rate is 9%, makes it one of the most competitive in the world that they claim. Okay, now I don't see this as really going to make that much difference in Dubai. Most people won't be affected by this. And if you got a free zone company, which I'll show you here too, you'll actually get by with it altogether. And I think even without this, I think with the way that the structures are set up in Dubai, you're really better off having a free zone company anyway. This way you don't have to have a local service agent that can just drive you nuts in your business. Because even with the new law they've got now, where you can own 100% of the company in Dubai, you still have to have a local service agent, which is basically an Emirati. The way to get around that is to have a free zone company, which is kind of really viewed as being offshore, and you don't have to have this local service agent that can create havoc in your business. Also, folks, if you want to learn legally how to get your income taxes to zero or how to get a second passport as quick as 45 days, do 3 things. Hit the subscribe button at the right of your screen right here, and you get new videos automatically as they come out. And I would like to hear from you. If you got a question or comment, put it below. Number 3 is go to our website, www.citizenshipquickly.com, and just ask for some help. Okay, now in Dubai, this came out in the Globe, or actually Gulf News report, and the UAE Ministry of Finance will introduce a corporate tax on business profits on financial years starting on or after June the 1st, 2023. Now, as this comes closer, they can modify and change this, so you need to keep abreast on this. But right now, it's not going to affect many people. The ministry also confirmed that there will be no tax on profits of up to 375,000 dirhams in a move that will help small businesses. Now, if you want to do that in U.S. dollars, you just take the dirham figure, divide it by 3.653, and it's just right around 102,000 U.S. dollars. So you're going to have to make over this, and you're going to have to be have a local company in the Emirates for this is where it's going to affect you. Okay, if you got a company that's in the free zone, you won't have this type of issue that's going to come up. Now, no corporate tax will apply on personal income from employment, real estate, and other investments or other income earned by individuals that don't arise from a business or other forms of commercial activity, licensed or otherwise. Now, as an international headquarters location, UAE business will be exempt from paying tax on capital gains and dividends received from its qualifying shareholdings. And foreign taxes will be allowed to be credited against UAE corporate tax payable. So it looks like the tax treaties, if you're paying taxes somewhere else, they're going to give you a break on that for what you paid there for against this. But like I say, most people won't fall into this at all, and if you structure your stuff right, you can get around it. Now, the UAE corporate tax regime will have generous loss utilization rules and will allow UAE groups to be taxed as a single entity or to apply group relief in respect of losses and intra-group transactions and restructurings. Now, the UAE corporate tax regime will ensure the compliance burden is kept to a minimum for businesses that prepare and maintain adequate financial statements. Now, businesses will only need to file one corporate tax return each financial year and will not be required to make advanced tax payments or prepare provisional tax returns. Well, that's a lot less hassle than the United States by a long shot. Now, transfer price and documentation requirements will apply to UAE businesses with reference to the OECD transfer pricing guidelines. Now, what's happened is, see, the OECD, Organization of Economic Cooperation and Development, they put pressure on Dubai. I used to think at Dubai that Dubai might be immune to this, but they basically thrown the towel in. Your biggest concern with this is the UAE is hitting on the big multinationals like Facebook, Google, other big companies, but after this is in for a while, it's going to be like that frog you throw into hot water, you simmer him gradually so he doesn't jump out of the pot. This is what they're doing here. I think within 5 to 10 years, they're going to be hitting everybody with a corporate tax rate, probably from $1, okay? I would say it's going to be in the next 5 to 10 years. This is how they don't come out with it all at one time. They simmer you in just like they do the frog, okay? They gradually get you in, heat your ass up, and then you're just used to it. They do it gradually. And there are ways that you can, obviously, if you go to Dubai, you don't have any ties there. You can take off and leave whenever you want, but I've told you I lived there for almost 5 years, and there are a lot better options than Dubai. Your licensing fees are thousands and thousands of dollars less than St. Kitts, and you can get your income taxes to zero and all your fees to zero. So I'm wondering, why do people go to Dubai? I mean, it just doesn't make sense. I don't think people are educated before they go there. If you're doing it to get your fees, your licensing fees, thousands of dollars, almost down to nothing, your taxes to zero, Dubai is not the best place to go for that. St. Kitts, you can get it to zero, and you can get your licensing fees are like $180 US dollars a year. That would be the way I would go. Now, businesses will only need to file one corporate tax return each year and will not be required to make advanced tax payments, as I mentioned before. And the transfer pricing and documentation requirements will only apply to UAE businesses with reference to OECD guidelines. Now, the UAE now is moving gradually. You know, they're doing this slowly, and they're going from a non-tax environment to a tax environment. And you can look for this in the future. I don't think they're going to go backwards on this. And this is going to give the UAE government additional income to fund the government's development activities. This comes about 4 years after the introduction of a VAT. They came out with a VAT of 5% in January the 1st, 2018. Most people don't even really qualify to file the VAT there right now, because there is an exemption limit, which is roughly about $100,000 on that to the U.S. Now, across the board tax until now, the UAE's corporate taxes only applied to banks and insurance companies. They were taxed at 20%. Now, individual Emirates have already imposed a limited corporate tax on enterprises engaged in exploration and production of oil and gas. It rates as high as 55% more. The oil companies get really hit when they come into the Emirates. Now, although personal income tax is still absent in the Gulf, many countries have in recent years rolled out a VAT, value-added tax, on individuals and business activities, with Saudi Arabia actually tripling their rate. I mean, now it's 15% per year. And of course, they've got an income tax too on foreigners. So, you know, it's still good, but like I said, it's St. Kitts has better options, as I mentioned to you before, if you're looking at your overall dollar amount that you're paying out. And of course, St. Kitts is also a free country. Dubai is not. And I would advise you not to be buying properties. And I've told people this before: don't buy properties in St. Kitts. I mean, in Dubai, because of I've seen people literally have their assets confiscated there for almost no reason at all. Now, the latest UAE announcement should be seen as a natural progression to leading economies of the world wanting to set a minimum tax on corporation. It's intended to stop the practice of corporate titans, especially U.S. technology companies, Google, Facebook, companies like this, having skeletal operations in a low tax regime and then paying little or no profits in their home country. Now, corporate taxes can be lowered through various deductions, and so the effective corporate tax rate, the rate that businesses actually pays, is usually lower than the statutory rate, which in the UAE, this case is going to be 9%. And I'll agree with that. It's, and most people won't even pay that, like I said. The effort at a minimum corporate tax cutting across jurisdictions gained traction in the months after the pandemic broke out and nations were facing severe economic disruptions. Now, the UAE's latest move brings the UAE's corporate tax regime into sync with global benchmarks. The GCC now remains an attractive jurisdiction for foreign investment due to favorable tax regimes in most countries in the region. However, a number of reforms have been underway to create new revenue streams while reducing dependence on mainstream resources of revenues in the region. In some countries, value-added taxes have already been announced, while in other countries, different forms of taxes are in place. Now, according to Jonathan Davidson, founding partner at the DIFC law firm Davidson and Company, he stated that the UAE, as it grows as an economy and takes on a larger role on the international stage, it makes sense for the authorities to take steps and put into place a transparent system of corporate taxation. I totally disagree with him on that. I think you're losing your sovereignty when you do that, but I think there's a lot of pressure now being put from OECD countries on the, not just Dubai, on other Gulf countries too. But he went on to say it's interesting to note that companies trading in free zones and not, this is important, and not conducting business in onshore UAE will continue to be exempt. So if you're going to go to Dubai, I would advise you to set up a free zone company, but don't break the law. Don't go into Dubai and sign contracts. You need to get people to come out to you. That's the big disadvantage of free zone companies. Because if you're out in Fujairah or Ras Al Khaimah, which is on the other end of the country, most people are not going to go that far out with the traffic. So you would have to, and remember, your business is, your free zone is determined in the type of business that you're involved with. So you might want to come to a certain free zone, but you can't do it because of the type of business you're involved with. Whereas if you're in Dubai, you can move wherever you want to, okay? But then you're subject to this 9% tax. That's the problem there. Now, with the digitalization of government services over the last few years, the administration burden to businesses to file corporate tax returns will be significantly less than would have been in case of the past. This similarly makes this the right time in the economy's maturity to take a step that's already been done for other GCC countries. Now, the new corporate tax regime takes the UAE several steps in meeting international standards on tax transparency and prevent harmful practices. I would say that that's not taking, it's funny how they say that's harmful to get your taxes